Tomorrow is set to be the most important day of the entire week as we have crucial inflation data set to come in, and it's actually expected to uptick over this report, which is extremely rare, and it's definitely not a good sign. On top of that, in today's video, we have an $8 million big money hedge fund trade that you will not want to miss. It's very rare to see trades of this size. We're talking about $8 million here that was just opened today. And then, of course, we have to talk about Apple's event today, talking about the iPhone 15 and a bunch of great stuff like that. So you better stick with us all the way to the end. We have some awesome setups as well. But with that being said, Tom, let's not waste any time today and let's get right into it.
Yeah, that market today was pretty insane. And looking at the SPY, we started kind of pulling back down to that big trend line as we head into tomorrow. So I'm curious if we end up falling under there with that key inflation data coming out. But I will say the big thing that happened in the market today was Apple's Wunderlust event. It's a bit of a weird name there, but they unveiled the new iPhone 15, iPhone 15 Pro. They came out with some new Apple Watches as well. And there's a bunch of great features that they actually have going on here, and you can see the stock actually fell down. And Mike, we talked about this yesterday, where usually on these events Apple has went down in the past, and I'm not surprised to see them going down here, and I also wouldn't be surprised if they went back down for the next couple days, especially if the market keeps falling and we have that bad CPI reading like we're expecting. I think Apple could go lower, but looking at the iPhone, they came out with a new design. They have a bunch of features that they've added, like they took away the mute button and added in, or the mute switch and added in a button here. The top part there where you talk into kind of moves, that's a new thing there too. So it's pretty cool, Mike. These iPhones look nice. Let me know in the comments how you think they look. I like the old ones better, but hey, it's always cool to see them innovating and coming out with new stuff.
Absolutely. So, there were a couple cool new updates sprinkled in, like you said, but at the end of the day, this event wasn't game-changing, but still, it's good to see. But Apple stock was not the best, we'll say. It actually ended up falling by almost 2% today, which is definitely a tough hit, but luckily we warned about this in yesterday's video. We highlighted some data that basically showed like 75% of the time when you have events like this, since 2007, Apple stock actually falls, and that's exactly what happened today. So hopefully we saved a lot of you guys some, potential losses on Apple calls, and hopefully some of you guys actually did pretty well with puts, because this is exactly what we talked about yesterday. But, looking at Apple right now, it's definitely getting a little bit weak, Tom. I was seeing a little bit of selling pressure across the overall market today as well. It looks like some of these investors are de-risking themselves ahead of the very important data that is set to release tomorrow morning.
Yeah, that data is going to be huge, guys. So 1 hour before the market opens, we are going to get that inflation rate year over year coming out. And Mike, they are expecting it to uptick. We came in at 3.2% last time. The consensus here is 3.6%. The forecast is 3.5%. So I'm expecting it to come in somewhere right around there. Now, core inflation is actually expected to come down a little bit, which excludes food and energy. I'll never forget Warren Buffett's quote. I don't know what's more core to the economy, food or energy, because energy is so crucial to just the world and everywhere, everything that we do pretty much. So I think that core it's good to see it going down, but then again, with the way oil's been running up and stuff, it's definitely scary, and we feel that at the gas pumps and throughout the economy with its ripple effects. And I will say, Mike, that inflation chart is going to get even scarier if we do really get a pretty good uptick tomorrow.
So that's the thing, the Fed's battle. I won't even call it a battle, Tom. I'll call it an all-out war against inflation is not over yet, right? And, it had basically there were a bunch of people cheering when inflation went from 9.1% down to 3%. But inflation's coming right back up, and it didn't hear no bell, right? As Randy from South Park would say. But either way, the main takeaways for tomorrow and why it'll be so important is basically we are starting to see inflation uptick, like Tom said. The last report came in at 3.2%. Tomorrow's expectation is anywhere between 3.5 to 3.6%. Realistically, if inflation data comes in at let's say 3.7 or 3.9 or 4% or higher, the market can get very nasty very quickly. On the other hand, if inflation data comes in at, let's say, I don't know, maybe 3.2% or less, that can be pretty beneficial. But at the end of the day, it all just depends on how the report comes. But these types of events are always, game changing for the markets, especially in this economy that we're in right now.
Yes, I know. And that economy right now is it's just like there's so much weighing on it. We have the housing market starting to get bad. We have inflation upticking again. And we're going into these winter months, and we're in September, Mike, historically the worst month out there. And we have another FOMC meeting in just a couple weeks on September 20th. That's whenever we're going to get that inflation, that interest rate move. So we'll see what they do with that. But the SPY is on a crucial trend line. As we head into this event, we've seen a few bounces off of this trend line so far, and I'm very worried that we're going to end up falling under this. It seems like right now, Mike, this current little run-up that we've had almost seems like a dead cat bounce. And if that ends up being the case and this data sends us lower, it's not going to be good, especially with stocks like Apple doing what they're doing lately. Apple's been so down in the dumps. See, if we go look at Tesla, it's not the best either, but it's been holding up a little bit better the past couple weeks. But man, Apple and Microsoft have been pretty brutal.
Exactly. So I will tell you, Tom, straight up, and I might get some hate from this, but basically looking at the market right now, I am pretty skeptical. I can definitely see a downwards move, especially if the data is bad. What I will say is these continuous lower highs that the market's been making is definitely not a good sign. At the same time, we have some of these big tech stocks not tanking, but they're just slowing down. So I guess what my official stance is if the inflation data comes in a little bit higher than expected, I would not be surprised at all if we did see a decent drop in the market. That can happen over the course of, multiple days and weeks. It doesn't have to be just one straight down day. But really, if the inflation data comes in good, I think the market might be able to just hold up okay. But all in all, I am a little bit skeptical right now. That doesn't mean to sell every stock you have and buy puts. Actually, not at all. But I'm just I would not be surprised if we saw a drop.
Yeah, I wouldn't either. And it's the main thing is it's not necessarily that we're going to be all doomy and gloomy, right? For the long term, we're still pretty bullish out there. But in the short term, whenever you still go to an NVIDIA daily chart, it's like there's still so much room to the downside, and we're starting to break these big 450 supports. So there's going to be a lot of opportunity. And if it does go south, obviously you could play puts on NVIDIA or SPY or SQ or anything like that. But if you want to get into calls, maybe look at SQQQ or SPXS or something like that. Some of those actually upticked very well today as those tech stocks dipped. SQQQ is up 3.3%.
Absolutely. So when the market's falling, a lot of times there's even more opportunity compared to when it's rising. So like Tom said, you have SQQQ, you have SPXS, you have UVXY, VXX. There's a whole lot of ways to capitalize off of falling stocks. But just keep this in your back pocket going into tomorrow. But there's even more data that I came across today that is also showing some worrying signals. And basically, that is the total net call volume, especially over the past couple weeks and months. Basically, what we can see and what this line represents is the call volume minus the put volume. So when, the data is positive, it means there's more call volume than put volume. And when it's negative, it means there's more put volume than call volume. And especially over the past couple months, like since July or so, we've seen a very sharp drop in this data. And that shows that, clearly there's a shift happening, right? And it's usually a bearish shift in this case. And the last time we saw a shift this significant, the market was not all sunshine and rainbows. So it's just like another worrying sign that, goes to show that we might be seeing a little bit of a rotation in the market right now.
Yeah, and I feel like it's just another one of those things, Mike, where investors are just so worried right now because of how overextended stocks are, and then we have everything going on with the Feds obviously still maybe raising their benchmark rates. I'm curious to see how those percentages change tomorrow with that data, but it's definitely crazy here to see that happening with the total net call volume. And I will say this does shift quite a bit, but whenever you see a steep drop like this, that really shows that, in my opinion, a lot of investors are getting pretty worried in the short term. And, this doesn't mean that they're necessarily overly bearish. A lot of this could also be, Mike, like people buying puts for hedging, as simple as that. They probably hold a lot of shares, but they hedge. I know a lot of hedge funds obviously do that. And still keep in mind too, there's a lot of people out there shorting puts as well.
No doubt about that. But looking at everything right now, while there are some warning signs, the market, is a powerhouse, of course. And I think the biggest thing to keep in mind heading into tomorrow and the rest of the week, in the rest of the month, is being able to adapt, right? Yes, we can look at some warning signs, but at the end of the day, that doesn't mean anything because it all just depends on how the data comes in, and even more importantly, how the market reacts. Sometimes you have bad data and the stock market goes up. Sometimes you have great data and the stock market goes down. Especially going into tomorrow, you have to be able to adapt. And if you can do that successfully, and you can obviously protect yourself in the form of having stop losses and proper position sizing, and besides that, riding momentum and just following the money, as I like to say, will be key for tomorrow and the rest of the week.
Yeah, we'll really stick to those strategies. That's a big thing right here, Mike. Stick to those stop losses. Don't let these things get away from you. It's going to get very volatile tomorrow around market open. So if you're trying to catch that momentum, play it cautiously, obviously, and try to really identify which way we're going to be going here. And, you can maybe use some of these big supports. Like if you wanted to play Apple, there's actually a nice weekly support here right around 174. You could maybe use that is like a nice level for a breakdown. Even on SPY here, we're right on that trend line. Maybe you could use 445 as a nice support there for a breakdown. There's a few levels that I am eyeing up, like SPY has 445 right there, and then this low recently down here around 443. I think that'll be a big one as well.
Sounds great. Well, let's get right into the fun stuff, which are some setups for tomorrow. One stock I'm watching very closely is BP. So basically, this stock fell off of a cliff intraday today as their CEO was basically fired. The stock, started selling off in a major way. And, when you look at this stock, even on a daily chart, this is a pretty nasty turn. A lot of selling pressures coming in. The volume is spiking in a major way. Implied volatility is on the rise in a significant way as well. And, there's just a lot of selling pressure coming into this stock. So I am going to be bearish on this one for the rest of this week and, for weeks at a time, depending on price action.
Yeah, this stock just filled a humongous gap right here, Mike, between $37.50 and $39 to $40. We pretty much filled that whole gap, and now we're pulling right back off to the downside. I know a lot of traders love to play those gaps. So if you are looking for that, look for that rejection there as it got filled. I like the play, Mike. I will say, though, oil lately has been pretty high, right? Like oil's been running up and continuing to go. So maybe you will hit some big resistance and start to push down for oil there. With my play, I'm actually going with Tesla for tomorrow, and I'm not doing it the way most people are going to like, Mike, so I'm going to take some flack here, but I'm looking at Tesla to the downside. So we've recently hit some pretty big resistances right around 278 to 280, and if we go to Bookmap on Tesla, you can see how big that 280 resistance level was. There was a ton of sellers stacked up there. If we end up breaking under 265 tomorrow, which is a more minor support on the Bookmap, then I'll go ahead and look at puts. But that big rejection up there, I don't really think that we're going to get back up there for a test unless that data goes well. So if the market's down tomorrow and Tesla falls under 265, look at those puts. If you go out to a daily chart, Tesla's bouncing off of a key trend line that they have not been able to get above, actually, since the beginning of 2022 and the end of 2021. So this has been a 3-year trend line at this point that they've been failing to break.
Yeah, I like that observation. So good stuff there. And if you guys have not used Bookmap already, boy, you are missing out. Definitely check it out. It's going to be that first link in the description and the comments down below. But it is X-ray vision, But for the stock market, you can see exactly where buyers and sellers are lined up. These act as major support and resistance levels. All you do is type in the stock and it shows you exactly where the buyers and sellers are. This is great, especially for short-term trading. And there's really just nothing else like it that, does it like Bookmap, right? So you have to check it out. It's absolutely awesome. And yeah, it's going to be that first link in the description in the comments down below. Definitely use our link, though, as you will save because we have a special offer attached within the link. So definitely check it out. But with that being said, Tom, my next setup is Bank of America, ticker symbol BAC. Looking at Bank of America, it had an absolutely amazing day in the market. It's been basing off of this like $28 level for a couple months now, actually since like March, and I really like the risk to reward setup with this one. Right now the stock is around $29 a share. Maybe you put a stop loss around $27.90 and then a profit target closer to 31 to 32. I think it makes for like a good risk to reward setup here.
Yeah, I like that. A nice move up to 30 or higher. I think that could definitely be in the cards here, especially with the way those banks were moving today. And I'm sure that they're going to be affected quite a bit by that CPI data tomorrow, too. So I'm curious to see how they move. And the thing that I like with banks is keep in mind that in some cases, there's arguments that like if the CPI data is bad for the market, it could be good for banks, if it raises rates, maybe they're making some more revenue. There could be arguments for that. So I'm curious. I think those banks look pretty hot here. But with my next play, I'm also going with another fan favorite, NVIDIA, to the downside. So I'm already going to get flack for Tesla to the downside. So I had to pick NVIDIA. I know we talk about this one all the time, Mike. If they fall under the big 444 support here, I'll be looking at puts. Oh man, this stock has been up way too high lately. We go out to that daily chart. It is just still way too high. We have the CEO of their company also starting to sell shares. And you can see, look at where he started selling shares last time and how much this stock fell down. So I would assume that he's pretty close to the top again.
Yep, we will see. But it's now time for those momentum plays. And with the first one, we have Netflix to the downside.
Poor Netflix. Those tech stocks today had a brutal drop. If they fall under 434, go ahead and look at puts.
All right, with the next one, we have Meta also to the downside.
META. We've been waiting for this one to fall off. If they fall under $300, look at puts. They bounce there right at the end of the day, and 300, we know, Mike, those even levels like that are very psychological.
Yep, and now with the last one, we have Tesla for both directions.
Tessie, yeah, they've been kind of hot lately, but end of day, they were kind of rough. So if they break under 265, go ahead and look at those puts to the downside. If they end up breaking up above 278, then look at calls, watch 280 after that.
Alrighty, so we have that upside level for calls, we have the downside level for puts for Tesla, and then don't forget about the downside levels for Meta for puts, and then the downside levels for Netflix for puts as well. But Tom, it's now time for the trade that everyone has been waiting for. That's the 8.1, or we'll call it $8.2 million trade of the day. We are looking at none other than C, or Citigroup. Basically, someone dumped an $8 million betting that Citigroup will rise. This stock is at what I'll call some historical low levels. And basically right now, someone bought the $52.50 strike call options that expire on January 17th of 2025. Looking at this stock, it's at a very low price point. The play has a lot of time. I really like the risk reward setup on Citigroup here, but I will say, Tom, I'm a little bit concerned about how far out of the money this call strike price is. So if you do trade this, I think it would be worth it to get closer to the money. But when I do zoom out and I really look at this stock from like a bigger picture view, especially given the expiration date, $52.50 doesn't look as far away, but we'll see what happens.
Yeah, and that 5250 area is also a pretty big resistance. Even from the past, that area was also pretty big. So I'll definitely keep this on the radar. What I kind of like about this one is that it's actually right on a huge support. I feel like we have a lot of stocks right on big supports right now. I don't know if that's happenstance or what, but like Disney's on big support, Citigroup, Bank of America. There's so many stocks that we could name right now, like Zoom, that are low and around supports. It's nice to see this one bouncing off its support around $40, having a nice move back up. And even if you don't go with the 5250 strike on these calls, because keep in mind they have a lot of time on this, I think in the short term it looks pretty hot. This is a pretty big support, and I would think even for the next couple months, it has a chance to maybe come up and test 45 to 46 at minimum.
There we go. Yeah, so we'll see. The stock is definitely one you want to have on your radar pretty closely, especially for the short term, but even for the long term. When someone puts, let's say, what do you call it, $8 million or $8.2 million into a trade like this, it's definitely not by random chance. And, when you have a banking powerhouse this low, it's also just worth watching in general. So keep a very close eye on this one going forward. I like it. It's a stock I hold for the long term. But like I said, I do think it would be worth getting closer to the money with these call options. I will also say that while this trade is enticing, that does not mean the stock has to rise tomorrow, right? The expiration is in January of 2025, so if you do trade it, give it some time.
Yeah, exactly. That is a big thing. It's a longer term type of trade. And honestly, if you are newer to trading, a good way to follow this might just be to grab some Citigroup shares because they're pretty low in the retrospect. And like Mike said, he's holding some for the long term. I haven't made the purchase yet because I've been kind of like waiting for these supports. But hey, if we start bouncing up here and showing some uptrend, I'll probably start averaging in a little bit as well. So I love these banks, Mike. And it's just one of those sectors that it's going to pop up eventually. It's just obviously right now with the way inflation is and everything, it's been a little bit shaky the past couple of years.
Yep, no doubt about that. So Tom, for tomorrow, we should have a pretty exciting day with this inflation report. Do you have anything else that's on your mind or any other setups that you're looking at?
Yeah, be ready for the inflation data. Even keep your eyes on GLD and SLV. I think those might be a little bit underrated here as we head into this event. If it does end up causing some fear, just keep an eye on these just in case. As a bit of an outlier, Mike, I will say I noticed that Bitcoin started really recovering up the past couple days. So if you guys are looking at something in the short term that maybe won't follow the overall markets totally, maybe check out Coinbase or Mara or Riot. They've been getting a little bit more volatile here.
Great stuff. Well, all in all, if you guys like today's video, make sure to subscribe. When you do, you'll see our videos recommended to you more often. In every single video, we cover a big money, multi-million-dollar trade, important setups for the next day, and just, important news to know about. So by watching our videos, you can stay in the loop. We do the hours and hours worth of research it takes. Sometimes we're kind of funny, sometimes we're not, but overall, when you subscribe, you definitely gain a lot of value. So subscribe, join the StockedUp crew. If you guys want to try out Bookmap, check it out. It's going to be that first link in the description in the comments down below. It's absolutely amazing, and there's nothing else out there like it. It's X-ray vision for stocks, and besides that, guys, let's have an amazing day in the markets tomorrow.